If you're not investing to beat inflation, then how are you going to build your wealth?
Hello and welcome to Invest Smart, a show where we talk about all things related to your money, your savings, and your investments. I'm Avni Raja. Joining us on today's show is Mrin Agarwal. Now, Mrin strongly urges women to ensure adequate health insurance as well as invest in equity funds. Mrin, thanks so much for joining us. Welcome to the show. Let me start off by asking you, when it comes to women and investing, and specifically these two aspects of health insurance and investing in equity funds, you've done a survey. What has that survey thrown up?
Yeah, hello Avni, and thank you for having me on the show. And as you know, that we do a lot of sessions at my company FinSafe to corporate women employees on how to manage money. And we also recently ran a survey, and one of the things that actually came out from that survey was that one of the questions that was asked was that in case of separation from the company, are you going to be dependent on the spouse cover or the partner cover? Or is this a situation you haven't thought about? And a majority of women actually said that I haven't thought about this situation. And also, normally when we converse with women, what we typically find is that women, they don't think about these matters because they feel that someone else is doing it, or probably what they have is enough, because many times people don't know how to even evaluate what's the right amount of insurance that one should be having, right? Because there's very little awareness about these matters. So I think, for their own well-being, it is very important that they have a good amount of cover, and that they're not only relying on the employer cover. And of course, today, if you're not investing to beat inflation, right, the traditional products do not beat inflation. If you're not investing to beat inflation, then how are you going to build your wealth?
The importance of health insurance can't be reiterated enough. So, what's the advice here for women?
So, the first thing that I would say is that women need to have at least 10 to 20 lakhs. And why women? I'm saying generally a family of four needs to have at least 10 to 20 lakhs of health insurance cover, given the cost of treating large illnesses. Right. And of course, do not rely only on the employer cover, because in case of separation from the company, how are you going to ensure that you have the continuity of the cover, right? So I would say that this is the starting point as far as health insurance is concerned.
Okay. Any kind of thumb rule to follow? You mentioned 10 to 20 lakh. If you could elaborate a little bit on how should one come to the decision of what kind of a cover to opt for?
So first and foremost, don't go in for the cheapest policy, because the cheapest policy, which means the one with the lowest premium, is going to have the most amount of exclusions, right? And it's very important to read the policy wording. It's quite painful to do it. The policy wording is available on the insurance company website. It's quite painful to do it, but it's very important that you read the policy wording to understand certain factors. The first being, what are the exclusions in the policy, which means what is not covered. Secondly, are there any sublimits? So for example, there could be sublimits on room rent. It could be capped at 5,000 rupees, or there could be certain things like consumables that may not be included in the cover, right? So it's very important to understand exclusions, what are the sublimits, and if there is any co-payment to be done. And number four, you also need to see what are the waiting periods for pre-existing diseases. So I think, it's very very important to assess a policy on basis of this. For me, somewhere the premium is not relevant at all. And another thing is, of course, one should never look at health insurance premium paying as a irrelevant expenditure or a wasted expenditure, even if you don't claim it, because you're protecting yourself against an uncertainty in the future.
The other point that you mentioned, Rin, is with regard to how a corporate policy is not sufficient. You need to have your own personal policy as well. On that point, how does one assess now if you have a corporate policy in place? How do you decide how much personal cover to take in that case?
So I would say, for example, if you've decided to take 10 lakhs cover, right? So you minus whatever you have in the corporate policy and you take the balance. And of course, there are various websites where you can do this analysis and look at the various policies. You can also go to the individual insurance company websites and look at it. Of course, there are many insurance advisors who are available as well, who can be consulted on what sort of a policy will be best to buy. Keeping in mind the medical history of the individuals, of course, you need to buy a policy accordingly, right? So I think, it's very important to do the right type of evaluation rather than just say, okay, this is something cheap and it's giving me this cover, right? But that's really not going to work.
Let's also now talk about the other aspect, which is equity funds. What's been your experience when it comes to women investing in equity funds?
Actually, I'm seeing two sides of the spectrum right now, because I'm seeing one set of women who are still scared of making losses and scared of taking the risk. And at the other end, I'm seeing women who are saying that I want to invest in stocks, I want to do futures and options and trading and stuff like that, right? So, again, in the same survey that we ran, 43% of women said that they want to learn about stock trading, right? And to me that is extremely scary, because we know that this stock trading, derivatives, all of these things really don't make money, right, for people in the long term, right? And it's very difficult to figure out where to invest and stuff like that. So so I'm seeing people being on one either side of it, but not looking at the middle path, which is like such a easy thing to do, where you have somebody else who's managing your money, and this is of course through mutual funds. So I do believe that of course you need to take invest into equities, because that's the only way you can beat inflation. But leave the stock picking to the experts. Focus your time and your energies on upskilling yourself so that you keep increasing your income and have more money to save and invest.
Yes, absolutely. So, what's the advice at this point in time, given where the markets are? We're seeing this massive bull run. So, perhaps it is a good idea to exert some amount of caution. But when it comes to equity funds, what would be the advice right now?
So the first thing I would say is that when you're investing in an equity fund, of course, you need to have a minimum time frame of 7 to 10 years. And so from that perspective, any time is a good time to invest, right? It's really difficult to time markets, and hence you should go ahead with the investment. Do not do the investment thinking that markets are going to fall and you'll be able to catch it at a lower level. That normally doesn't happen, right? There's also data to prove that even when you invest at market peaks, you still end up making a good return, and that's because of the volatility in the markets, right? Now, at this point, and as always, we do see a lot of trend chasing in the market. And that's something that I would certainly caution people about, that don't get into a fund just because you're seeing great returns in that fund over the last 1 year. When you are looking at investing in equity funds, invest as per your risk. So if you can take a higher risk, of course, go for mid cap or small cap. But if you want to be conservative, then just a plain vanilla index Nifty 50 fund or a flexi cap fund is going to be enough. Just these two funds are honestly enough for a conservative investor in their portfolio. The other thing that I do want to talk about, because I do get a lot of inquiries whether I should do regular and direct, and I want to say this: the difference between the best and the worst performing equity fund in a year is 6 to 7%. So, to save that 1%, if you're going to end up with a wrong fund, the price that you're going to pay is much more. So, I would say take advice, take professional advice, have a financial planner hand holding you through this financial independence journey, and don't base all your decisions just based on costs.
Whether it's equity funds, whether it's health insurance, very often the question that comes in is, how do I choose? There's so many products, there's so many companies. How does one go about choosing which one is going to be the appropriate one for me?
Yeah, and that's where there is an issue. I agree, because there are so many different policies. As far as the policies are concerned, I would highly say that go with an insurance advisor. And especially if you're not able to kind of read through those policy wordings, I would say that would be the best bet. The second thing that I would say, as far as mutual funds are concerned, is that yes, I know it's really difficult to figure out. So as I said, right, if you're a conservative investor, a combination of an index fund and flexi cap works well. If you want to take on some more risks, then obviously add on the mid cap fund. And again, like, if you feel, okay, I don't know how much to put in equity, I don't know how much to put in debt, then you have a category known as the balance advantage fund, where they do the regular rebalancing between equity and bonds based upon certain market conditions, or on a mathematical model basically. So I would say that, if you absolutely don't know where to invest, then an index fund or a balance advantage fund or a flexi cap fund, these all three are a good starting point.
All right, Mrin, we leave it there. Thank you so much for joining us and taking our viewers through all of those important points.
You're welcome.